Well, it's a story that's fueled plenty of conversations at work this past week. A 34-year-old average Joe and father of two went from being a life insurance salesman to a millionaire overnight, but we'll get to that story in just a moment. First of all,
he did that.
I'm on the right page
Yeah,
here.
he did that with the help of online Reddit users. Kevin Gill drove up the cost of GameStop stocks, which then triggered that market phenomenon.
Sorry about all that. Well, joining us now live is University of Texas finance professor Travis Johnson to help us be a little smarter the next time we're at the water cooler. And Professor, not everyone is well versed when it comes to the stock market. Can you simplify this for us? What exactly is happening here?
Well, GameStop is a company that sells video games in malls. It was already losing money before the pandemic happened, and that just made it 10 times worse for them. So normally, companies that are struggling have really cheap stock prices. GameStop a year ago was trading for $4 per share. One of the reasons it was so cheap is because a bunch of sophisticated Wall Street investors were betting against it using something called short sales. These Reddit investors, they noticed these short sales and thought this was a good opportunity to work together and buy a bunch of shares, pushing the price up, causing losses for the Wall Street investors who would then exit and let the price fly up even higher. Over the past month, this has turned into a crazy tug of war between the Reddit investors and the Wall Street people. And so far, the ordinary investors are winning. The price is over $300 per share, close to 100 times where it was a year ago.
Professor, do you think this is going to catch on? Do you think more people might start to do this and it could change Wall Street as we know it?
Yeah, so for GameStop in particular, I think that this can't last forever. Every time we've seen something like this in the past, like the dot-com bubble 20 years ago, it has eventually burst and left a bunch of ordinary investors buying in too late and losing money. Yep. I do think that Wall Street will see more mobs from the internet like this in the future, and there will be more GameStops to come.
Yeah, this could be very dangerous for a amateur investor trying to get in on this, right?
Yeah, so my advice for ordinary investors is to stick with the basics. Index funds have the best track record over history and have tripled over the last decade and are easy to use. If you're going to do something like this with GameStop, never risk more than you can afford to lose, because some people will lose almost all of it. And if you have to do something like this, try to find an early version of the next GameStop instead of being the last person to come to this GameStop.
All right, helpful input there. We appreciate it. University of Texas finance professor Travis Johnson, thank you for joining us.
You're welcome.
And as the professor mentioned there, growth of GameStop's stocks is not really a reflection of the video game store's success. In fact, in recent years, the company has been struggling in part due to video games being available via download as opposed to buying a disc in the store. In fact, last year, both Sony and Microsoft, makers of the PlayStation and Xbox video game consoles, announced that for the first time in history, digital game sales exceeded physical sales last year.
The volatile moves we're seeing in the stock GameStop and some others, but particularly GameStop, have nothing to do with the company's actual prospects. This is a company that has lost a lot of money over the last year for understandable reasons. It's based in malls and it sells physical copies of video games.
Nevertheless, GameStop went up 68% today, closing at $325 a share. And just today, the Texas Attorney General issued civil investigative demands to companies that have blocked certain stock purchases since the GameStop market spike. Those companies include TD Ameritrade, E-Trade, and Robinhood. Ken Paxton said the shutting down of threats to market dominance, quote, stinks of corruption.